Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions featuring the proprietary bull-bear point and figure market breadth summary chart for August 19th, 2018. Market breadth. With this past week's market fractional decline, our bull-bear point and figure ratio at 0.82 fell from 0.96 last week. The total count of securities in bullish or bearish patterns increased 2% to 2,962. The count of bearish stocks increased 10%, while the count of stocks in bullish patterns decreased 7%. The Pirls P&F Market Breadth Summary Chart shows us a market now 2 weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 59 points for the 8th decline in 10 weeks. At a positive 14.70 points, it continues below all 8 tops above plus 100 in the last 30 months, and it continues above all 4 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on lower average daily volume. Momentum. The CCI 20 daily is below minus last week's positive 33.27 at a negative 15.01, having risen, then fallen to about negative 45, and forming a Woody's zero-line reject long entry signal at Thursday 8/16 close, continuing in a Woody's uptrend. The CCI 20 daily now has 3 consecutive days below zero. We will follow this trade simulation in next week's commentary, and will exit if the CCI 20 daily falls below the zero-line reject pivot. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 120 weeks ago, while the daily CCI 20 began a Woody's uptrend 5 weeks ago. The CCI 20 weekly fell to a positive 83.58 from a positive 101.58 last week, continuing outside the plus or minus 50 range required for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: some tech and REITs on top, gold and silver, oil, oil services, and some tech on the bottom. Bullish, REITs and networkers continue in the top 5. Gold and silver continues to lead the bottom 5. Oil and oil services continue in the bottom 5. Disk drives has left the bottom 5. Bearish, semis has entered the bottom 5. S&P retail and comp tech have left the top 5. Focus this week from www.wolfstreet.com. What truckers and railroads just said about the U.S. economy. The following are some key points and charts. The transportation sector is a reflection of the goods-based economy in the U.S. Demand has been blistering across all modes of transportation. Freight shipment volume, not pricing, we'll get to pricing in a moment, by truck, rail, air, and barge, according to the Cass Freight Index, jumped 10.6% in July compared to a year earlier. This pushed the index, which is not seasonally adjusted, to its highest level for July since 2007. The dynamics in the transportation sector are clearly signaling that the U.S. economy, at least for now, is ignoring all of the angst coming out of Washington, D.C. about the trade wars, the report by Cass said. The pop in the Cass Shipments Index of 10.6% was the sixth double-digit increase so far this year. Only June had come in with a single-digit increase at 7.2%. The Census Bureau reported yesterday that the combined value of distributive trade sales and manufacturers' shipments for June, so lagging a month behind, but that's as close as we can get, jumped 8.2% year over year. Trucking companies are responding to the capacity squeeze. In July, their orders for Class 8 trucks soared 187% from a year ago to 52,250 units, the highest number of monthly orders ever. Truck manufacturers, which had been laying off people during the transportation recession, now have their own capacity squeeze that goes all the way up the supply chain. Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. For Santu Pirls Stock Market Commentary, I'm Cindy Pearl, hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.